Recently, the global CEO of Schneider Electric just made a public interview and he has big plans for India that was revealed in this video. If you've not seen it, I will link it below. So in today's video, we're going to check out three important things. First of all, why I love management talks and you should too if you're a long-term investor. Second, key takeaways from the global CEO of Schneider on India's growth potential. So Schneider investors, you should definitely pay attention. And third, Schneider Electric as a share. We're going to analyze that from some technical and fundamental basis. All right. Before that, everyone, hi, my name is Yatin Ranade. I've been an investor in stock market since 2009 and I teach stock markets. But here is the disclaimer for this video. I have invested in this stock, so I do have vested interest and I'm not a SEBI registered analyst. So this is not an investment advice. This is my personal view. So please do your own research before you actively participate in this stock. Okay. Or at least get some professional advice. Why I love management talks. And you should too as an investor. Okay. So this goes back to a very good example, a company where just by listening to one management interview, I was able to make multi-bagger returns. This is KPIT Technologies, Mr. Ravi Pandit. He's a co-founder and he did a BQ interview some 3.5 years back, not exactly 3 years back. And just on that basis, I was able to find this investment worth it. Okay. And of course, there was a lot of research that I went behind it. But here you can see I have the purchase is there on my portfolio. Let me just quickly take you to KPIT. Here we go, KPIT and detailed view. The first time I heard the interview in 2021, the stock was at 270 levels. From there on, it has gone up and made almost 1900 as its high. This has happened with multiple stocks, but this is one of the best examples of a small cap or the mid cap stock going to become even larger in size. Okay, so that's why whenever management talks, I usually pay attention, and here are a couple of reasons why. Okay. So first and foremost, this is directly from the source. Okay, management people are the people who are working in the company. They usually have high stakes, their own stocks in the company, their dividend, their income, their vision is completely tied up to the company's business. Okay, and they're focused on business, they're not focused on the market. So no middleman, no analyst in between, just directly the person who's actually in the trenches for the company gives us exactly what they plan to do. Okay, second, you also get a vibe check. Basically, you get to understand who is running the company, who are the people this company has hired, and the place where your money is going to go, what kind of people are running it. Like fund managers, we cannot go and check and talk to management directly, right? So this is one of our small and close enough windows for us to start understanding how are the people at that company. And if you do enough of these, you start developing an intuition towards what kind of people are good, what kind of people are bad, and the way they're talking, are they using too much jargon, so on and so forth. Okay, so to understand management, it's very nice to check their public interviews where you get to see the person in action. And finally, future is greater than past. Brokerage reports and analyst reports everywhere will always be talking on the basis of what has already happened and what they expect. But management is usually always future ahead. So they are talking about what's going to happen in future and they are the ones who are going to do it. Okay, that's why I prefer management conversations over brokerage reports. Of course, both of them are important, and I'm not saying you should not do your own analysis apart from that, but priority should be given to what management is saying, and then you can make your own analysis. Hope that makes sense. But always remember, take all of this with a pinch of salt, because they're human beings, not gods, and the world of business is very risky. A lot of things happen, a lot of things are not under their control, even if they're confident. Okay, so make sure that you keep that at the back of the mind while understanding what kind of people are running the company. All right, now let's get back to the key takeaways from the global CEO. Schneider India's growth potential. Here are some of the key takeaways. I've just broken down into very salient points. There are a lot of things that were discussed. But first of all, India as a growth market. India's growth as a market, I'm so sorry. India is the third largest market in the world, just like India is becoming slowly the third largest economy of the world. America being the number one, which they were very clear that it will never move away from the number one position because of the sheer size of the power usage in the country. But after China, India comes in, and they are trying to make India the second largest market, and that is their plan. Hope that happens. It is going to be beneficial for the company and definitely for the investors. And they're also focusing on 90% local manufacturing. So whatever work they're doing in India for products that they'll be making, 90% of it will be manufactured over here, and that's why they are strengthening the domestic production and supply chains. I've spoken about this in my Chinese bamboo philosophy. I think they are probably going towards that. And again, they will also be a little more insulated with the global volatility that is going on with all the Trump wars and trade wars. Importing things becomes difficult. Exporting is going to be much more beneficial from India rather than getting stuff from outside. So if 90% is happening over here, it is going to be great benefit to the company and this country as well. And then there are already 31 manufacturing there are 31 manufacturing sites that Schneider has. They are planning to make 3 new factories. So basically, they're going to go on at a steady pace and keep increasing their product production over here. Okay, and they'll also be exporting their items. Okay, so whatever they're manufacturing in India, it is going to be for domestic usage. That means companies usage, company to their clients within India usage, and company to company abroad as well. Okay, and company to other players abroad as well. So basically, India is going to become their one of their key manufacturing hubs, and that brings in a good scope because there could be new lines of income that could start in this country, apart from having growth within this country as well. Okay, and with the rupee falling, I think that's going to be a beneficial case for a lot of, especially exporting outside makes much more sense than importing when your rupee is falling. All right, data centers are going to be one of the biggest focus, and now this is the focus for the Schneider as a company all across the globe. 24% of their orders in 2023 came just from data centers. Okay, and India is going to become one of the hubs for manufacturing UPS and cooling technology. All right, so India again is closely positioned to the global data center growth, and Schneider is one of the big key players of data center. You already know the hype that is going on around. So whatever happening in the world, it is going to be followed up in India as well, because data again is the new oil, and we're going to have a lot of data centers all over the world and India. And energy transition, India has got its whole plan of going into 500 gigawatts of renewable energy from whatever current levels that are there. In all of that, Schneider is well placed, whether it is solar, wind, or energy management, making sure that the overall grid is made into a much more modernized version one. All of that, Schneider is very nicely placed, and it's closely working with the government to work towards this. Okay, closely working in the sense, of course, they are in talks with them. Whenever government plans to make such changes, Schneider is there to ready with the kind of products or services that will be required. Okay, and AI and grid modernization, I need not talk about it. AI is everywhere. There's a lot of AI is going to need a lot of computing power. A lot of computing power is going to need actual power, and Schneider happens to be a person, sorry, not a person, a business that will definitely benefit from it. Their focus is going to be providing technologies that will help AI to become better and more efficient, and investing in smart power solutions and green energy is going to be their focus. In grid modernization, now overall grid modernization basically means whatever grid, that means the entire energy structure of the country is connected together, so energy can flow from one source to the other. And now the modern grid itself means that even the customers are going to be producing energies. The end users will have some smaller solar applications, solar rooftops, and they'll be producing their homegrown electricity and sending it back to the grid. So this entire network of everybody connected with everybody, and end user to the producers being able to take and give energy, that is where the grid modernization is going to take place. And again, if you understand even remotely what Schneider does, it is one of the key players in providing this setup. It is there in the value chain, because during transition of electricity, you need switch gears, you need all of those equipments, and which Schneider is one of the experts of. Okay, now We already know what is the CEO's vision, and yes, all of this hype is there, but specifically Schneider Electric shares currently have got an advantage according to me. Now, please understand, this is not a direct recommendation. This is my personal view. You need to do your own analysis or get some expert advice before you actually make any decisions. Okay, this is just to help you guide and understand what this means to me. Okay, all right, so let's look at the key aspects which I like. Now there are many things that you can use as fundamental analysis, and there is the whole research of reading annual reports and having other forms of investing frameworks. But the first thing that I like about Schneider is that it's a classic proxy play. Okay, which means when everyone is digging for gold, you need to sell shovels. There's a classic example right now. I have Nvidia on the screen, which is basically providing all the the chips that are required to run Microsoft, Google, and Meta. These are the big players of the world who are running for the internet race, running for the AI race. But the one company that is providing all of them with high powered chips is Nvidia. Okay, and that's why you see Nvidia has become a huge stock by becoming the proxy player. So this principle comes from one of my gurus, which I absolutely follow. I would say 90% to 80% of my investment philosophy comes from Mr. Peter Lynch. Okay, and he mentioned in one of his books that during the gold rush, most would-be miners lost money. People who are trying to dig for gold in uh, gold rush era in America, but people who sold them picks, shovels, tents, and blue jeans made a nice profit. In fact, Levi Strauss, the Levi's jeans company, is one of those examples, and there were many other examples as well. So Schneider, again, bringing back, we're going to have this huge energy transition, right? And there are many players, including the government, who's trying to make sure that a lot of power is produced and provided to the country. And there is going to be solar, there's going to be wind, and there is going to be traditional as well, there's going to be nuclear energy as well. All these players are going to be producing electricity, but all of them need to use the same grid or the components that are done by Schneider Electric. Okay? Now within these players, even Adani can produce solar energy, Tata can produce solar energy. Various players are going to compete to produce the same kind of green energy or traditional energy. Even within those spaces, ultimately they have to bring it back to the grid. Schneider is one of those players which is very nicely placed at specific places. That's why I love it as a proxy play on the fact that India's energy requirements are going to be soaring through the roof. We're going to need a lot of electricity, and we are going to need a lot of infrastructure for that. Very specific components of that Schneider provides. Not to mention, there are going to be mega energy guzzlers like data centers and chip manufacturing units or chip fabrication units. All of that is going to add to this, but I will talk about it when I talk about the power mega theme. All right, but proxy play wise, Schneider makes a lot of sense. Now the other advantage which I speak about in my investors training is that their parent, which is Schneider Electric, main company from France, is a global player in this electrical infrastructure segment. Okay, and they're at 137 billion dollars market cap in euro, sorry, billion euros in market cap, which is approximately 13 lakh crore. Okay, that company is huge. In India the company is small, but it has got a huge parent, and the advantage is many, including the fact that they will get the branding, they will get the technology from all over the world, be it America, Europe, and China. Because they have got their headquarters, so technology exchange is easy. When India starts in manufacturing stuff, they can also be the players who can purchase from them in case Indian market is not doing well. And financial help will always be there. There is going to be key management personnel. These are people who have already established themselves in the bigger markets, so India becomes one of the obvious markets, so the management experience and expertise will also come in. So there are many advantages of having a really big and careful parent, and I think Schneider is going to get big advantage from that. Next, if you look at the ROE and ROCE, I've just compared it to one of its key competitors. Now, just like Schneider, ABB and Siemens have got the same idea. They are also part of the proxy play. They are also part of International chains who have international giants who have made their branches in India. They've made their India division listed in here. But if you look at the ROE of Schneider Electric right now, given it's a little too high, return on equity 126% compared to 28% and 17.6% of Siemens. At the same time, ROCE of Schneider is 37%, which is very close to ABB at 38.6 and a little higher than Siemens. Okay, so on these two metrics, Schneider kind of fills the gap. But the biggest kicker in all of this is Schneider Electric is only at 15,700 market cap. It is a mid cap. I would say it's a small cap company compared to the kind of Indian markets that I'm seeing in the future. While ABB is almost 1 lakh 12,000 at market cap and Siemens is 1,72,000 market cap. Okay, so while these two players do have advantage and they are also placed with the same advantages which I've previously mentioned, Schneider comes with an advantage of being small sized, which gives us the high growth potential. But at the same time, because of the brand value and the parental standing and positioning it has, I would say the downside is a little less. Again, don't take this as a hard and fast rule. There is always going to be risk in business, but it is less likely to fall down. But the growth ahead can be exponential. It can become a 1 lakh crore company tomorrow. It can become one as big as Siemens tomorrow as the market grows, as the power sector grows in India. And I can see this company going 4, 5, 6, 10 times as well. When that happens, I don't know, but there's definitely potential compared to ABB and Siemens. Those are going to grow a little slower than Schneider because of the obvious nature of the mid cap and large cap stocks. If you look at the chart right now, the stock has nicely fallen below its 200-day moving average and 50 moving average, which is known as a death cross. Properly bullish stock. It gave a nice growth from March 2023 till about, I think March 2023 it was somewhere at 150 200 levels. It went up to 1000. That means it grew 5x. But last year markets were all in mayhem of mid cap, large cap. It's fallen down to 600 levels, so almost 40% decline from its high. Okay, and that just tells me that right now it's definitely not overvalued. Maybe it's slightly more overvalued compared to 1 year, but definitely not like last year where it was at 1000, which was a really ridiculous level for the kind of business this company is doing. And that happened with almost all mid cap and small cap stocks. This is it. I don't want to go into too much details of Schneider Electric. This was my view. I will be coming up with power sector deep dive. Maybe I'll do a couple of videos and make a playlist out of it. Do let me know if you guys would like to hear more about power sector.